Hey, this is Josh High with Swift Home Mortgage, and I want to talk to you today about the changes that just went into effect January 1st, 2020 about VA loans. So last year, the VA Bluewater bill was passed and turned into law January 1st, and that's when everything took effect. The Bluewater bill is going to remove limits on VA funding amounts. So we used to only be able to go up to the conforming loan limit to do 100% financing. Now we can go up and above that. So if you want to, like our limit in our county, the surrounding areas that we work on here is $510,400. So if you wanted to go up and above and buy a house for $700,000, you can do that now with no down payment. You can come in, just be responsible for closing costs and maybe even get that negotiated in your contract, but it does not require a down payment any longer. Now, some of the downside is that the funding fees went up. So if you're familiar with VA funding fees, you'll know that you don't pay mortgage insurance over the life of the loan, but you do pay a one-time funding fee, which typically gets wrapped into your loan balance. So you end up paying that through your payments by financing a little bit more. So used to, the first time use funding fee used to be 2.15, now it's 2.3%. So they've gone up a little bit. The subsequent use, like your second and third time use, used to be 3.3 and now it's 3.6. So that one's a little heavier, but they're going up a little bit. So that's something we have to pay attention to. Now, this funding fee table here, straight from the VA, shows you the most common funding fees that are being used. You see on that first time use, first time you're ever using that VA certificate of eligibility, you're gonna be at a 2.3 funding fee. If you put down 5% or more, that drops drastically to 1.65. If you put 10% down or more, that drops to 1.4. Now, a subsequent use after your first time, 3.6 on if you go 100% financing, 3.6%, and then those fees are mirrored to the first time use. 5% down, you only have to pay 1.65, and 10% down, only 1.4. Now, the refis and stuff are also in here. We do a lot of the interest rate reductions. That's only half a point. If you're doing an assumption, which is really rare, you're doing a half a point there. So there's some different ways to look at that. But I encourage you to understand this table if you have a VA loan and know what kind of funding fees that you're going to be up against if you're planning on using it. Now, I wanted to show you a really quick trick that a lot of people don't think about when it comes to using their VA funding fee and their VA loan. A way to kind of get around that higher 3.6 subsequent amount, or even the 2.3 in the front end, is if you have some cash in the bank and you have some cash that you want to use towards your purchase, you don't have to use the 100% option on a VA purchase. It's nice not to have to put the money into it, but on the flip side, more money is being eaten up in your equity and your loan balance is getting bigger than it would be if you would have put some money down into it. So what this scenario is going to look at is a $300,000 purchase. The first scenario is looking at the full funding fee, 100% financing, and the second one's looking at 5% down, 95% financing, where you get that reduced funding fee. So take a look here. On the first one, $300,000 times 3.6%, that's a $10,800 funding fee. That gets tacked on to your new loan amount, $310,800. The payment amount on that is $1,352 per month. That's only principal and interest. That's no taxes or insurance or anything like that. It's raw payment right here. So the pros on that is going to be less money out of pocket, but you're financing more. That's a con. So depending on your situation, that's something to think about. Now, if you have some money laying around and you're buying a $300,000 house and you have 5% that you can put into it, that's $15,000. So your new loan amount, your base loan amount is $285,000 times that 1.65% funding fee, that break for the 5% down, your new loan amount comes out to $289,702. So that's already much less than your $310,800 on your 100% financing. So what's that going to do when you finance less? One, it's going to give you a lower payment, $1,260 per month, almost $100 difference, but you're coming off the cash to pay for it. So the pros in that is you're financing less, you're eating up less equity with a smaller funding fee, and your payments are lower, but the con obviously is you're coming off of $15,000. So if you don't have that 15 grand laying around and you don't want to, you can't use it or don't want to use it, then that 100% option is there for you. It's just a little bit more expensive in the long run. So this is just something to think about, food for thought. Usually when we're dealing with our VA clients, we make sure that they're aware of this option and don't just assume that they automatically want to take that 100% financing eligibility that's there for them. We want to make sure they see the whole picture and really come up with a financial plan for them and help them manage their mortgage into the future. So if you have any questions about VA loans, that's our favorite loan to do. About a third of our business is VA. Lots of VA stuff happening here in the Tampa area. We'd love to talk to you about it, whether you're trying to buy a house, if you know someone that has eligibility or you want to check that out, or if you're a realtor working with VA clients, we'd love to be able to talk to you and help you. So give us a call, 813-606-4255, or visit us online at swifthomemortgage.com. We'll talk to you soon. Bye-bye.